Good morning. Oh, no, we're officially at noon. So honored to be back with everyone this week. Feels like forever since we did a Monday market update because we were focused on spending time with family last Monday, which can you believe that was the 4th of July? So honored to be back, and let's jump straight in and see Zoom's kind of a little slow today, but here we go. We are going to start with our market update, kind of a little different today, just because we're getting there from the beginning. I wanted to address two questions that I've been getting. Some of the responses today are going to be a little anecdotal, and others we're definitely going to have a look at some statistics because, as you guys know, I am a data geek. I relish the thought of spending time in spreadsheets and with the data and then bringing that to you in hopefully an understandable, digestible format. So, quick introduction, Jennifer Tim with the Welcome Home Global Group. We are a real estate team located in Southern California. I am also have a business running in Central Texas. I'm licensed there. And we have a division for international real estate, but we're going to really talk about what's happening nationally and then some anecdotal word from the street or from the trenches, so to speak, here in Southern California. Let's jump right in. Okay, questions that I have received this week from buyers. Is now a good time to buy? And sellers, should I wait to sell my home? So we're going to look at some of the national trends, and then we're going to have just a casual conversation because there isn't an easy, there's a very simple way to respond to both of these questions, but there's a lot of complexity behind that. So we'll get to those once we've had a look at what's happening nationally. So as always, just a quick reminder that the numbers that drive the US real estate market, it's all about home sales, home prices, month supply of inventory, mortgage rates, and affordability. And we're not going to address all of these things individually, but more of a collective conversation as we go through. So what's happening nationally? As you know, I get information from a couple of different sources. All of them are very credible. As we know, you can get information everywhere, but I try and follow people who I know have proven over time to deliver reliable information based on data, not kind of always just, blanket opinion or to create sensational headlines. So this is from one of my lending partners. This is a national mortgage company. And just a couple of things to highlight. So we know with the increase in interest rates, that's not new news. That definitely has reduced the number of buyers who are considering buying, or maybe it's just a matter of affordability. They're no longer able to really think about home ownership at this point in time. So mortgage application submissions have fallen. And then a little bit later, when we talk about Southern California, we're going to give you some anecdotal, sort of from the trenches type responses, because I've had some conversations with some local lenders. I'll let you know what they're sharing with me. Some good news on the job openings. I think it's really reassuring to see here that there are 2 job openings for every 1 unemployed person. The true reality is we've been through this, the great period of resignation. And there are some people who are just not going to re-enter the workforce for various reasons. And there are others who have totally companies are redesigning or deciding what truly makes sense. And then when you have a look down at this very last paragraph, I think that helps explain it, because if you have a look here, government payrolls decreased by 9,000 jobs in June, and yet manufacturing companies added 29,000 to their payrolls. So there's an adjustment of who is truly looking to scale their businesses in different ways, whether it's upscaling or downscaling. So that's kind of just a little bit on the national economic front. And let's move forward. So this was an interesting article that I picked up on. This is from Realtor Magazine. And their article, I think this was the 7th of July, so that was last week. Home buying is 5% cheaper than a week ago. As we've covered, we saw the interest rates go up. The Feds raised the Fed rates as a reaction to the totally insane seller's market we were seeing, which was, overinflated prices. As a homeowner, we've benefited because we've built equity in our homes, and yet that was not a sustainable model. It's really not healthy to have this extremely insanely hot seller's market because the buyers obviously are just going to disappear eventually. What has happened since then is obviously their first knee-jerk reaction is the mortgage rates. The market responded. Mortgage rates, we saw reports of over 6%. There were conversations about 7%, and then things have come down. So the bottom line with this story is interest rates are going to be a little volatile because it really depends on what's happening nationally with the economy. As you can see, this sort of subheadline was mortgage rates are dropping as concerns mount over a possible economic recession. So again, housing is used a lot to help moderate what's going on with the economy as a whole. So this was a good one. So let's have a look. The next slide actually, this is what they included. So these are the interest rates that they're reporting. Now, if you have a favorite lender or you're receiving communication from a lender, you're probably seeing some different rates. Now, I had somebody ask me just yesterday, I was meeting with some folks on Sunday afternoon, and they were asking about interest rates. And yes, one of the lenders in my area had an interest rate, the 30-year fixed was around about 4.83. Friday, it was 5.13. So that's how much variance there is right now. So what's reflected on this slide are truly the Freddie Mac averages for the week ending July 7th. So this is really up-to-date information. And as you can see, we're not sitting at the 6% anymore. Now, does that mean that we're not going to go back up there? No, it just means that it was, okay, we're adjusting. So it's really important before panicking about insurance rates is to truly understand where they are currently and then assessing that based on what your needs are. But this is very reassuring information. And just so you know, down at the bottom, the 5-year hybrid adjustable rate mortgages, there are definitely a pool of buyers who, if they knew a little more about an adjustable rate mortgage, that may be the product that they're looking for in this day and age. So if there is something that you're considering, you are a potential buyer, definitely get connected with a mortgage person who you truly trust, who can give you the right information and help you determine exactly which product might work for you so that you can take advantage of what's going on in the real estate market today. I decided to put this in just as a reminder. I showed this to you 2 weeks ago. It really is a good thing to kind of keep this in historical perspective. And yes, I know that this slide only goes up until May 22, where we were under 5%, but it just shows you where we have been in the past. And so historically, our interest rates are still very, very manageable. Another thing that I listened to this morning was Logan Matashami, who is with Housing Wire. He's their lead analyst. He puts out basically a vocal podcast. I think it's twice a week. And I listened to this one this morning, and he really has a finger on the pulse of what's going on. He's definitely one of my regular sources who I will consult with and just follow and see what he's talking about. In this discussion, the question was posed to him, so what is that interest rate where you feel we need to be or be there for a sustained period of time to get to more of a balanced market? So as I say, we've been in this insanely hot sellers market, which has really outpriced a lot of buyers. and it was not sustainable. So we really want to get to the point where we're in a balanced market, and we'll go through those definitions when we get to our local discussion. And his opinion, according to his models that he's running, is 4.5% interest rate. So where we are positioned now, we are seeing the increase in inventory, because this is what it's all about right now. The only way that we can truly get the seller's market to adjust is to raise the inventory so that there's more options for buyers, so that buyers don't feel like they have to throw 20 offers at a property before they've even, multiple properties on the same weekend, just to get the one in a lifetime chance that their offer will even be looked at, let alone selected. And according to him and his models, it's 4.5%. He was also kind of having a discussion around 5% and then came back down to the 4.5%. Now, again, this is one person's opinion based on the models that he's running. He is highly regarded. And so we'll just see, and I'll keep checking in with his podcast to see what he's predicting. Okay, so let's talk about Southern California, because the questions that I've been getting have definitely been from community members in my area. All right, so just that reminder of kind of how we define sellers markets and buyers markets, and historically where we are with regards to, that scenario. Less than 60 days, hot sellers market. At the beginning of the year, we were in the insanely hot, which we don't even have a category for. We are truly knocking on a hot sellers market, entering into a seller's market right now. So I know in South Orange County, last week we were around about 56 days on market, and expected market time is the time from when you put a for sale sign in the yard and there is an accepted, agreed upon offer and you open up escrow. And so we are getting to that point where it's a seller's market. Now, reports on housing. So Stephen Thomas is the gentleman who I follow, who puts out reports on housing. He has predicted that there is a possibility that we're going to see a very slight buyer's market, which of course is right underneath here, which is the 120 days to 150 by the end of the year. Now, part of that is because this is what happens anyway towards the end of the year. We've gone past our spring, summer high. We are in our getting into that fall market, and then we get into the holiday market where, number one, inventory, basically demand is way down. So that means inventory goes up. We don't find, because sellers do know about this normal seasonal trends, they may not choose to put their homes on the market, because we normally see the highest volume of homes going on the market in May or June of the year. So that early springtime to catch the summer folks who are moving. Now we always go into that sort of slow down cycle before we hit the highs again. So yeah, but our goal is to really get as close as we can to sustainably stay in that 90 to 120 days on the market for the balanced market to better benefit buyers and sellers. So expected market time year over year. As we've mentioned, we're trying to get back to where we were prior to COVID. And a lot of this, so this was another discussion that we had yesterday, and I'm going to go to the next slide in order to continue this conversation. I had somebody asking me yesterday, is this all because of COVID? And while we know that COVID influenced for a short period of time sellers' willingness to put their homes on the market, because they didn't want to have strangers traipsing through their home for very obvious reasons, we have to look historically. We know that inventory has been declining since 2014. Before COVID even hit, there were conversations about attempting to raise the interest rates with the hope that the buyer demand will be pushed down, which would then allow the inventory to rise up to get closer to that balanced market. It hasn't always been successful, that strategy, but then of course, the declining inventory. And then, of course, we had COVID, which totally depressed everything. But we've been in that trend. So we can't blame everything on COVID. I mean, 2014 was a long time before COVID hit us. So we truly have been in a declining inventory market, which just, it's supply and demand, very simple process. We all understand it. If we can't get something and we really want it, we tend to be willing to pay more in order to get it. So we're trying to get back to a more even inventory level. And definitely we're seeing that trend at the moment, but at last count, we were still at least 50% below our pre-COVID levels. So that buyer demand is still there. Sellers are still seeing multiple offers if their homes are priced according to today's market, not what was happening a couple of weeks or a couple of months ago. So just a couple of anecdotal things. So word on the street and from the trenches. Again, meeting with these people that I met with yesterday afternoon, driving through their little neighborhood, one street, 3 for sale signs. And then she commented that there were 3 open houses on that street on Saturday, something that we haven't seen happening. So we can see that there's an increase in inventory because we're starting to see, I mean, other than that, we're tracking the numbers and we do pull the reports every single day. And we have these amazing spreadsheets to keep tracking new on market in various market segments that we're really focused on. But we are seeing some more for sale signs. We are seeing more open houses. And another reason why we're seeing them is because they aren't selling within 24 hours of going on the market necessarily. It is taking a little bit more time. And next week, or if you are receiving our newsletter, you will see the updated stats. We always include a little segment in there for market update so you can see. But if you'd like to receive detailed information about what's happening in your particular neighborhood, definitely reach out to us. We would be so honored to put you on our regular market update emails. You can get them twice a week or twice a month or once a month to keep you informed. So yes, so word on the street is more for sale signs going up, staying longer, more open houses. It's a good thing. Now, from the trenches, so I had a great conversation with one of the lenders who we put on our referral list. And again, we always give you choices if you're looking for one. And I asked him, I said, so what's happening in the mortgage industry? And he said, well, buyers who had kind of put on the brakes when they first heard about, the alarm and 6% and the sky is falling are back. They're seeing that it's not quite what they were being led to believe by popular media, and their need to buy was still there. So they are back. They are getting reapproved for their loans because obviously if you have an approval from 6 months ago, that's not going to be valid today. So they're going through that process. So he is actually seeing an increase in mortgage applications. So unlike the national where it looked like there was a decline, he's definitely seeing an increase. Now, again, if you read the text, I didn't read it out loud, but it was seasonally adjusted. This is normally when we see fewer mortgage applications because of the time of year that we're in. And as I say, that demand always decreases as we get into our holiday market because no one wants to move through the holidays. But news from our loan officers is that they are getting buyers approved and those buyers are ready to make purchases. So sellers, it's a good thing. It's good news to hear that that's what we're seeing. Again, from the trenches, speaking to my fellow realtors, sellers who are pricing their homes are getting them into escrow within a reasonable period of time if they truly understand and are the right expectations have been set. So it's really important to hire the right real estate expert who can help you as a seller figure out what is happening on your street, in your neighborhood, your city, so that you can truly understand what the market demand is looking like for you. We're also seeing the opportunities to interact with buyers more frequently. And sellers. I actually am working with a gentleman right now who's looking to sell 2 properties. It's just the right time for him to do that. He understands what's happening in the market, and it's still the right time for him to do that. And he's okay. He's perfectly okay that he's not going to get 100 offers. And he's also okay that chances are, while there may be a bidding war, depending on which pricing strategy he chooses, that he may or may not have multiple offers. So he's okay. He's not looking to get a lot over where he understands the market is right now today. Open houses, yes, they're back. As realtors, we love this. This is our opportunity to interact with community members. And by the way, I love it when neighbors come into our open houses, because who knows the neighborhood better than the people who live there? So we love hearing from you. We love having you come in. You never have to apologize for that. We have great conversations. We're seeing our buyers are back. They're educated. Sometimes they need just a quick update on what's happening in the market, but they're there. They haven't gone away. They just aren't as many of them, and the ones that are coming in are very, very specific about what they're looking for, and we love that. We absolutely love working with them. So, quick bottom line. So, my quick response to both of these questions is it really depends on your motivation. If you have to buy because you are relocating to a new area and there really isn't, renting is not an option for you for whatever financial reason in your family, then obviously it's a good time to buy. And likewise for sellers just know, if you understand what the market is doing right now, then it is up to you. And again, if this is a job relocation, maybe you don't have a choice. Maybe you can't carry 2 mortgages and you do need to sell. I think the reassurance here is it really depends on your motivation. Explain what your motivation is to your real estate expert, and then figure out what the correct strategy is for you. A real estate agent is never, ever going to force you to buy or sell a home. Really, we don't have that power. But what our job is to make sure that you have all the correct information so that you can make the right informed decision for you and your family. So, buyers, is now a good time to buy? Well, really look at it. Can you afford it? Does this make financial sense? Are you looking short term, long term? Have that discussion. Meet with your financial advisor. Maybe your financial advisor is in your family. Sometimes a good thing, sometimes not. Family members, make sure that they are equipped with the right information to guide you. Sellers, should I wait to sell my home? Well, the homes that are on the market, if they are priced according to the market, they are selling. That is not an issue. They may be taking a couple of weeks to sell, but that's okay. So at least you don't feel like you're going to be kicked out of your home in a very short period of time. Normally there's a little more time in order to do that, but they're there. If you are truly, as a seller, looking for that crazy hot sellers market, well, you could risk it and you could wait until the beginning of next year. Again, it depends on your timeline and your motivation. Hire an expert to help you figure out what items you need to consider, and then you build your strategy based on what it is that you need to do. So again, this is the basics for both our sellers and our buyers. Price ahead of the market. If you're speaking to a real estate agent today, but your plan is to only put your home on the market and start marketing a month from today, well, things are going to change. I mean, they change every single day. If the house next door sold today, that would change what I could potentially sell my house for tomorrow. So you've got to look ahead at the market and figure out what it is. Think about your pricing strategy when you think about pricing ahead of the market. So on the Welcome Home Global Group, we present basically three options to our sellers, and then they decide which one they want to go with. Do they want to go with number one, the less is more strategy? So you price it a little under the market with the hopes, never a guarantee, that you're going to get multiple offers and that bidding war may push you above that sort of true market price? Or do you want to go with market pricing, which is based on the data right now? You may get fewer offers, but you're still going to have a buyer pool that this is going to be attractive to, and the data aligns with what the market is looking for. Or the third option is retail pricing. If you really want to fight for, well, if your intention is to put it high and have that wiggle room, then understand that a lot of buyers are going to understand that that's how it's been priced. And unless there's a very, very convincing reason for them to purchase your home over another, and maybe it is because maybe your home is truly unique, well, then, it's going to go with that. Your buyer pool will be diminished because your buyers are educated. The majority of them are working with agents who are helping them understand the data to understand where your home is priced based on the current market conditions. Speaking of condition and location needs to determine your price. Take that into consideration. And we all think that our homes are an absolute masterpiece. And you know what reality is? The upgrade you did in your kitchen in the 80s is probably not what today's buyers are looking for. And I'm going to tell you it really isn't. So that's got to be taken into consideration. And because you've lived with certain things in your home, you really need the opinion of somebody who's going to come in with fresh eyes, who's basically going to put the hat of a buyer's hat on and let you know whether, that little thing that you have in your home that you've lived with, whether that's going to be something a buyer is going to be willing to live with or not, or whether it's a good idea to either adjust the price or correct that little thing you've been living with. Location has always applied in real estate. If you're next to a busy road, if you have power lines, if you're next to some kind of retail business that has after hours activities, that all needs to be reflected in your price. Just because you are right next to the ocean may not be enough depending on what else is going on with the location of your home. Just a reminder again, days on market stacking up is the kiss to death to achieving a top sales price. There is a particular property in an area that we monitor really closely. It has been on the market for over 3 years. So I met with the sellers in, I think it was 2018. That house is still on the market. And for various reasons, and we're really not going to go into those reasons, I did not take the listing, and they have since been through, I don't even want to know how many listing agents, and just recently they're back to doing it for sale by owner. 99% of the problem with their property is the price. Now it's also the fact that it's basically stigmatized, because if a buyer comes along, the agent's going to do their due diligence and they're going to say, well, look at the history on this. This has been on the market for X number of hundreds of days. Is there maybe something wrong with this property? So days on market stacking up is the kiss of death to achieving a top sales price. Buyers, budget. It all starts with understanding your budget. How much can you afford to pay every single month towards that mortgage repayment? So important to figure that out, to make sure that you're not going to be overextending yourself. Are you buying for a short term? Are you only going to be in the home 5 years? Are you going to be in for 7 years? Really have those things figured out. And then make sure that you've met with a financial advisor, and most definitely, if you're getting a loan, with a reputable loan officer, so that you can figure out what your options are. Then you've got to understand. So number 2, you've got to understand what's going on in the market. Just like with sellers, it changes every single day, or it could potentially change. understand what's going on, make sure you've got a trusted source for information. Don't follow the big headlines. Make sure you've got real data coming to you to make an informed decision, and then have that strategy. Make sure that you're ready to make a purchase, because if that right property comes on the market for you, chances are it's the right property for somebody else as well. So what is your strategy to be able to win an offer? It's still a seller's market, and specifically here in Southern California. So that's it for today. Thank you so much for tuning in. And again, if there's any topic that you would like us to cover, please either just put it in the chat, or shoot us an email, a text message, whatever it is. We want to be here to support you and give you the information so that you can make an informed decision about what could potentially be the largest asset that you own or are hoping to own. So we're so honored to bring you this information. And that's it. And we will see you next Monday.